Good morning, traders. Welcome to BCR's daily market roundup. Today, we will be covering the US dollar index, crude oil, spot gold, and AUD USD, analyzing the market movements and key technical levels that happened recently, and covering the geopolitical and economic factors on the assets. First up, we've got US dollar index. The US dollar index bounced near the 103 level after a stronger than expected non-farm payrolls report and cautious comments from Fed Chair Jerome Powell. Despite this rebound, the dollar remains in a bearish technical structure, having hit a 6 month low of 101.27 last week. Key resistance levels at 103.18 and 103.37, while downside targets are 102.00 and 101.27. The MACD and the RSI continue to suggest weakness, and the recent death cross on moving averages highlights sustained bearish pressure. Coming on to crude oil, crude suffered a brutal 9.8% weekly drop, the worst since March 2022, sliding to $60.26 amid fears over Trump's aggressive reciprocal tariffs and a potential US-China trade war. With China threatening retaliatory tariffs, market sentiment is bearish. Key levels to watch: support at $60 and $57.66, resistance at $63.47 and $65. The RSI on the monthly chart suggests bearish bias, and uncertainty around global demand could keep oil under pressure. Gold saw wild swings last week, spiking to an all-time high of $3167.60 on safe haven demand before dropping over $150. It rebounded again on weak US data and equity market losses, ending above the 3,100 mark. Technically, momentum remains intact. Key support lies at 3,005 and 3,000, with resistance around 3,054 and 3,070. The MACD remains positive, hinting that gold's medium term uptrend is still alive despite volatility. Lastly, we have the Aussie dollar. The Aussie plunged to 0.5986, its lowest level in 5 years after the US jobs data and Trump's tariff shock. The pair rebounded slightly but still close at the worst G7 performer last week. Technically, it's deep in bearish territory with the MACD and RSI confirming downside momentum. Support stands at 0.5986 and 0.5870, while resistance at 0.6087 and 0.6200 must be clear to reverse sentiment. Fears of fears of rate cuts from the RBA add to bearish pressure. That's it for now. Keep an eye on the key levels for this week. Make sure you stay updated with us. Thanks for watching. See you in the next video. Trade safe.